Bitcoin having a ranging day near the all-time high. That's right. Bitcoin is having a ranging day near its all-time high price. As I discussed earlier, it was around 68K. Took a nice $2,500 drop and then bounced back almost halfway or so. It's been bouncing around up and down in the 67K area. And that's frankly to be expected. What do I mean is having a ranging day? I don't mean the price is necessarily ranging. I mean the returns are ranging and the price is following in ranging fashion because price follows the returns. And the VRE width of Bitcoin today is well over the threshold of 2%. Therefore, it is in ranging day mode. What does that mean? Well, that means that although you might see, as we've already seen, a few trending moves on the 15-minute, it was really just that one main one, but there have been a few others, small ones, that you could even almost say were negligible, but they were not. They were definitely tradable. Overall, it was a ranging day. What does that mean? It means that the asset is moving very nicely through the VRE ranges. If you look where it was up at the first weekly resistance, which is really the first weekly sell line. This is sell price, which some people call resistance, but that's really just to make it comprehensible to people who don't understand the VEPs. And it's been bouncing around there and in and out of the central daily range so far today. Now, could it make some wild moves? Yes, we've seen some fairly wild moves on ranging days in the past, often followed by counter wild moves in the other direction. Usually on the same day, but very, occasionally on the next day as well. Does that mean we're likely to see an all-time high today? We may not. Really does not matter if you trade the VEPs, what the price is. Because as I said, price follows the returns. And returns are what the investors and the traders are after. They don't really care about the price. At least not serious professional traders and investors. Right? Doesn't matter if the price goes up, down, or sideways. It matters that there's a sufficient pool of liquidity to make the trades with. Now, what does that mean for you as a trader? Well, it means that this is actually a very tradable day if you know how to trade the VEPs. Because it can frankly be harder to get in on a move during a trending day if you don't know how to read the VEPs and you miss a move, it starts running away from you, and then you think you've missed the move, and then you don't get into the move until it's too late, by which time you should really be getting out of the move. Whereas on ranging days, you'll typically see moves happen and then stop and very often go the other way, ranging back and forth. Now, does that mean that overall the day can't go up or go down? No, obviously the day is going to most likely go up or go down somewhat. Can you have ranging days where it ends up basically flat? Well, yeah, that happens a significant amount of the time. By the way, you can also have trending days where at the end of the day it's basically flat. We have a wild looking wick to the top or the bottom, to the top and the bottom, and it ends up flat because you've had trending moves in both directions. Now, do you have to have trending moves to make those significant moves? Or can they move on a random walk? Yeah, they can move on random walks. But if you look at lower time frames, you'll notice that even if you have, random walks happening on higher time frames, like the 15 minute or the half hour or the 33 minutes, that lower time frames will often show you there are indeed random walks that are on higher time frames that are actually trending moves on lower time frames. Well, how can this be? Well, each time frame has its own measure of entropy, and that's how you determine if it's in a trending move or a random walk. And it just so happens we have an indicator that shows you that at Alpha Trading. And you can very easily determine if an asset is in a trending move or a random walk, because it's very clearly shown. Right? The default colors are pink and blue, but you can change them to whatever you want. When the entropy is bright blue, that is a trending move. When it is anything other than bright blue, it's in a random walk. So, Bitcoin is in a ranging day. It is near the all-time highs. It does not necessarily need to hit the all-time highs anytime soon. In fact, it may not hit it for a long time. It doesn't ever have to hit it again. But the probabilities are that it will hit it at some point. And if you look at the bigger picture of things, there's a pretty high probability that it might even hit it this week or the next, even though this is a ranging week. Now, that said, what about use case for Bitcoin? What does the use case have to do with anything, Yasha? Well, as somebody who cares about the marketing of things, I find it's important to have good use cases. Why? Well, the more use case we have, the more justification there is for people to use this magical internet money, as people call it. And the more we have that, the more we have adoption. Because the more people see a reason to use it, the more they'll start to use it. The more they start to use it, the more adoption you have. The more adoption you have, well, the greater the returns. If people are using the product more and more, then inevitably the price will go up if there's greater demand on a product that has a limited supply. Well, what is its use case? Well, Bitcoin has multiple use cases. First of all, it is a peer-to-peer electronic cash system. Now, you can say, well, nobody's going to pay for a coffee with Bitcoin. To which I would say, maybe. Although people certainly have bought coffee and sandwiches with it before. Another use case, aside from sandwiches and coffee, is to buy other goods and services. For example, we sell access to our indicators in Bitcoin and a few other cryptocurrencies. Why? Because we want to increase the use case of cryptocurrency in general. We personally think that there's a very strong use case for cryptocurrency, and it is not something that is going to happen if merchants do not make available different offerings that are available to the general public. So, for example, buying indicators or buying airplane flights or buying houses or cars or yachts. These are all things people can do today with crypto. What other use cases does it have? Well, it is perceived to be a store of value. What is a store of value? A store of value means it has an asset that holds its value over time and even increases over time. And if you look at Bitcoin's store of value returns over time, Bitcoin has indeed been a great store of value. Having gone from 0 to nearly 70K, which it did in the first 11, 12 years or so of its existence, and now is again near that 70K range in its 15th year of existence, and could very well increase again. In fact, the mathematical probabilities are that it will. Why? Because it is still a very young asset, relatively, and it still has a lot of potential adoption. A lot of potential new users are likely to buy some Satoshis, even if they don't buy a whole Bitcoin, because there just isn't that many, there aren't that many Bitcoins available for the whole world to buy, obviously. Well, what's another use case? Well, another use case is to store information on a public ledger, which is on the Bitcoin blockchain. In fact, the Bitcoin blockchain is a public ledger. What does that mean? That means that it records in a spreadsheet or a ledger, an open ledger that's verified by multiple sources, multiple computers that run Bitcoin nodes, every single transaction that Bitcoin has ever run, from the first ever transaction until the current one, and is constantly being updated. How is that a useful use case? Well, it's incredibly useful from an accounting point of view, from a historical archival point of view, and from other points of view, where keeping an accurate record of things may be useful. So, you have those use cases, and of course you have the use case of the network itself securing itself. Well, how is that a useful use case, you might ask? Well, if you're using a protocol which secures itself by the very fact that there are computers running the protocol, it means that you can run transactions on it which are secure. Why does that matter? Because it means you have a network that you can verify is secure, and therefore you can guarantee that transactions are secure as long as the network is secure. And to date, the network has been secured. Have there been a few minor hiccups? Yes. Were they quickly caught and fixed? Yes, they were. In fact, they did not affect the overall network security at all. They were, for the most part, hacks that were potentially able to cause problems, but were stopped before they actually caused real problems for the actual network. Those were software issues, and they were fixed by the core developers. So, you have those. And of course you have things like ordinals. Ordinals are a form of inscription onto Satoshis, which are the units of Bitcoin. There's 100 million Satoshis in each Bitcoin, and people have been inscribing an amount of content, from images to audio to other things. And that is just some of the use case of Bitcoin. More later. Happy Bitcoining.